My name is Ahlam Al-Wakil in Faculty of Commerce, level 3. I'm going to continue. One of the best way to grow and to generate new accounts is qualify prospect, which means determine if a prospect is likely to be converted to buy a customer. That's in the maturity of to making decision, and that and here some companies may initially qualifying lead qualifying lead.
So again, this paraphrase. This paraphrase. So here we are talking about 3 types of data which salesperson must know about the qualifying prospects.
Yes.
In other words, if we would like to identify the qualifying prospects, we need to collect information according to following 3 types. Number 1, type number 1, we need to identify if the customer needs our product or service.
Yes.
Number 2,
and outright and ability. Yes, but I want to say that some companies may initially leads by phone because it's low cost, and that's the person who the salesperson the salesperson leads profile all about 12 characteristics that he in the first call with the customer he have to answer the 12 questions, such as the current vendor and the percentage of saving and around the equipment and the payback period, and that's all. When he answer this all 12 questions to the customer, he will that's all to know just and to know if the prospect at least is good enough, or to walk away from these leads. And here there's 3 elements that the salesperson need to know about the customer. Customer needs. It's about qualify customer needs. It's about qualify leads. It's referred to these to these people who have already used the seller's goods and services, and planning in the near future to buy it. And I want to say that prospects sometimes are so satisfied with the current suppliers that he work with, and it's so difficult. And when he satisfy his desired and needs, it's so difficult to move up and to follow another customer and another product. So we need to discover a needs and desire that's so strong, and to satisfy his need.
That's clear now. Let's go to number 2. I thought to make purchase.
I thought to make purchase. Some of us that do not have enough authority to buy, so it will be just a very good and very flavorful impression to us when we making a call to have information about the goods. But it's not a good to companies in payment. The salespeople in organization have many problems to identify who has authority because of the large and the huge number of who involved in making purchasing decision. And ability to pay, and ability to pay is I need this product and I have this authority, but I don't but I have a lack of financial power purchase. So it's not productivity to the company, because they need the ability to pay. That's to pay enough to the company, and so they always make an initial screen of a prospect on their capability and ability to pay, and they so eliminate prospect that do so higher pressure on credit risk.
Now listen, we would like to add something. We would like to provide you with a real example. Now let's talk about number 2. Listen here. Whenever we are going to talk about authority to make purchase, this is something very important. If you are going to enter any ministry, any organization, either it is a private or non-profit organization or public one, if this organization is interested to purchase something, this decision is attributed to more than one person. Because of this, we are saying, because of the number of the people involved in making organizational decision. Number 1, of course, he or she is going to be the director or the manager or the chief of executive. Number 2 is going to be the purchasing officer. Number 3, it might be a purchasing committee. Or somebody is going to wonder why we have to hire a purchasing committee. Let's give example. Imagine Iman or Ahlam. Both of them, they are having something called business administration, a graduate or business administration degree. Well, now they are hired as a purchasing officer in X NGO or in X organization. Imagine their organization is in a bad need for purchasing 12 or 10 PCs, computers. Now, they are graduated from business administration. Or sometimes Iman might not have the technical specifications about the good and the excellent PCs. So in this case, Iman is going to say, we would like to hire or assign a purchasing committee. Well, the members of this purchasing committee is going to have a good background about computers. Why? Because they are going to provide us with advice, with consultation, and with other technical information, which the purchasing officer is missing. So, if you are going now to account the number of the persons who are involved in the purchasing process, they are going to be the manager, the purchasing officer, in this example Iman, and the 3 members or 4 members in the committee. So the total number, we are talking about 7 or 8. Because of this, you as a salesperson, you have to value, you have to weigh who is having the most influential decision of purchasing or not purchasing. Well, according to this identification, the salesperson must spend a maximum or the biggest time with this influential person. Or don't waste your time with persons who do not have authority to make the decision of purchasing. This is the point here. Okay? Now, to sum up with what Ahlam said, all the time remember, if we would like to say this is a qualifying prospect, yes or no, we have to answer this is yes, or this is yes. The 3 yeses means this customer is in a bad need for our product. Yes, this customer has the authority to purchase. Or finally, yes, this customer is able to pay our product. If there are 3 yeses, then we are talking about qualifying prospects. If 1 yes is missing, then we should not deal with this customer or prospect as a qualifying one. That's it. Clear? Yes. Okay. Go on. Let's go to the second part. Who's going to begin here? Okay, that's fine. Now listen. All the time remember, this is an example for some of the sales agencies. With these sales agencies, they are going to say how we are going to assess our sales opportunity. The company is called Siebel or Siebel system. The Siebel system is assessing the sales opportunity. The sales opportunity is founded on 4 factors. Factor number 1, this is the question, is there a sales opportunity? Question number 2, can we compete? Question number 3, can we win? And finally, it is concluded by, is it worth winning? Now, let's analyze this thing. Is there an opportunity? It means the sales agency is going to ask itself, we should identify information about customer's application or project, customer's business profile, customer's financial condition,
access to funds, compelling event. Stop here. Let's give example about this or this. Anyone? Okay, customer financial condition or customer business profile. Sometimes, for example, we might wonder or we might hear in the news or rumors, we have to be sure that if the targeted firm is suffering from financial challenges or not. Here, when we're talking about firm, the firm here is our customer. If it is facing financial constraints, financial problems or troubles, this means we might not have an opportunity, a sales opportunity with this firm. Another example, a compelling event. If we are a Greek firm and we are about to sell something for this Greek firm, we are going to look at Greece generally, and we are going to find that there is a compelling event which is pressurizing the Greek firm. This might prevent this firm from selling or from buying from us. So this is considered to be reasons for having opportunity or reasons for not having opportunity. Clear? If we finished with this, everything was okay, then we are going to go to another list. With this list, we are going to talk about the formal decision criteria. Also, we are going to go and get information about solution fit. In other words, is our product is going to provide them with solution for their own concerns and the problems and needs? Also, sales resource requirements, current relationship, unique business value. Once again, all the comments and all the answers about these points, they must be positive. They must be okay. If they are okay, we are going to go and assess the sales opportunity from the third angle, from the third perspective. Well, this third perspective is, can we win? How we are going to determine or answer this question? By analyzing these things. Number one, inside support. Is the management supporting its own sales staff member? Are they providing them with what they need from infrastructure, tools, equipments, bonuses, motivations, and so on? Executive credibility, cultural compatibility, informal decision criteria, or political alignment. Somebody might ask about the political alignment. Well, this is important. In other words, now if we are going to talk about the transaction and the cooperation between the American firms and the Iranian, we can find nothing. Why? Because there isn't political alignment. But if you are going to ask the same question and compare between the cooperation between the Indians and the Iranians, they are cooperating in a very nice way. Why? Because Iran is classifying itself as a neutral country. India is classifying itself as a neutral country as well. Because of this, we are talking about what? Political alignment. This political alignment is going to encourage or discourage the cooperation or the relationship between the seller and the buyer. Finally, we are talking about this perspective. Is it worth winning? First, we have to know, is this relationship is going to be defined as a short one? Is it a future revenue? Is it a strategic revenue? Is it profitable? Is it non-profitable? If the answers for these questions or issues are positive, this means everything is okay. So the transaction of selling will be assessed as a good sales opportunity. But if the answers for all these questions are negative, then this opportunity might not be realistic, might not be profitable, might not be attainable. Well, this is an example for assessing opportunities. Any question or comments about this? Go on. Compelling events, it is. Compelling, it means something forcing us to do something. An external factor which is going to force us as a firm to adopt a situation or to take a decision. Now, when we explained it, we said, for example, if we talked about Greece, Greece is one of the European countries which has a membership in the EU. Overall, this country is suffering from recession. Recession now is classified to be a compelling event. So if you would like to sell something for a Greek company, we are going to collect information and we would like to be sure that the Greek recession for this Greek firm isn't classified to be a compelling event. If it is a compelling event, this means we are not going to sell anything for this Greek firm. This is an example. Sometimes also compelling events, if you would like to strike examples about Gaza, the closure is considered to be a compelling event. The siege is considered to be a compelling event. The lack of insecurity is considered to be a compelling event. So we can give or provide you with many examples. Any questions, any comments about this? Go on. Okay.
Good morning. My name is Sarah Al-Wadiya. I specialize in business administration in the 3rd level. They will explain managing the existing account. As we know, customer is the king. Any organization or any company without customer will be nothing. And we know increasing our sales or increasing company sales related to ways which is keeping our current customer or attracting our customer, attracting a new customer, which is more important keeping current customers because we don't know if we attract a new customer will be loyal or not to our company or comfortable or not. And a lot of sales program move from transactional to consultative type of account relationship to enhance keep our current account. And we talked at the beginning of chapter 3 about opportunity management. Opportunity management prioritizing all the company's resources to enhance keep current account and we have example at the beginning towards Beren, which is said the figure we have.
Excellent.
For decade 33% to the keep attracting a new one, and 42% to keep our current customer. And we have got in Arabic says one bird in your hand better than 10 in the trees. Today and we'll move to managing the basic what I explained, managing existing accounts. Managing existing account, any salesperson must ability to determine long-term value for customer. For example, must know a short-term demand situation competitive, and they must know with whom will contact profitable customer or non-profitable customer. Too small here means non-profitable customer. For example, when we'll buy a product, we must know if this product will be comfortable to this customer or not. Will this price of the product will be covering the cost or indirect sales expense. Indirect sales expense we must know if covering expenses or not. If have all this ability, will be the salesperson will be in the excellent position. Excellent position, as we know, to be ability to determine a long-term value, competitive demand situation, as we said. We have indirect direct sales expenses. As we know, direct sales expenses include salaries, bonus, traveling, communication, transportation. As I said, must know if this price of product will covering, and we know we have to calculate or to know how to know is this price will cover. We have two steps: calculating cost per call and break-even sales volume. Thank you.
Thank you very much.
My name is Amira Al-Amassi, study accounting at the 4th level.
In this slide, we talk about two steps for the analysis in accounting size. The first step, calculating the cost per sales call, and the second, calculating the break-even sales volume. Now we're talking about the first step in detail. The first, calculating the cost per sales call. What the meaning of cost per sales call? This meaning is the function of the number of calls you make per day. The number of days available to call on customers in the direct selling expenses. Direct selling expenses include any expenses.
Once again, this is something very important. If we are going to calculate the cost per sales call, we are going to talk about functions consisting of 3 steps. Step number 1, you have to identify the number of calls you make per day. Underline it, please, Amira. Number 1, calculate the number of the calls you make per day. Step number 2, we have to calculate the number of the days available to call the customer. Third, we have to calculate the direct selling expenses. So 3 steps must be figured out. Amira, please number them. Number 1, 2, and 3. Exactly. So the function of these 3 steps is equivalent to calculating cost per sales call. Go on.
What is
Now let's begin from step number 3, which is
direct selling expenses.
Yes, go on.
What is direct selling expenses? It's such as expenses like travel, communications, compensations, and this expenses why is named direct selling expenses? Because the company wouldn't incur this expenses without the salesperson will present in this company. In the next slide, we apply the practical.
Let's return back. Let's summarize. Now listen. Direct selling expenses means these expenses are linked with the existence of the salesperson. If the salesperson is absent, then we cannot talk about
the expenses.
Somebody is going to wonder why. Why? Because of the following. Direct expenses including salaries, including bonuses, compensations, vacations, holidays, and so on. All these things are entitled for the salesperson. So if the salesperson is absent, then
no expenses.
Exactly. That's it. Go on.
In the next slide, we applicable example for industry product. In the beginning, we list the direct selling expenses. In the beginning, which include communications. In the beginning, salary and different of benefits like hospital and insurance. After that, direct selling expenses such as money items, communications, emails, automobile, and
automobile, it means cars, vehicle. In other words, we are referring to the means of transportation.
And get the total as 105,040.70, and after that we'll calculate the call per year. Total available days in the 1 year, 260 days. We list the days not work salesperson in the company, like vacations, holidays, meetings, and training. After deduct the total days from the less days, give 205 days, and the average calls per day 3 call. Now multiply the 205 days multiply 3 اللي هو the average call per day رح يعطينا 615 calls. That's meaning انه الافريج كوست بير كول هلا رح نعمل divided للتوتال اكسبنسز اللي هو 105.40.70 على اللي هو الافريج كول بير داي.
Amira, don't talk with the slide, talk with us.
انه هيني.
You are explaining, you are talking with the slide, you are not talking without it. Go on, yes, yes.
هلا بدنا نعمل كالكوليت للافرج. Now we'll calculate the average cost per call by divided the total direct expenses على from total calls per year. رح يطلع لنا result إنه الافرج cost per call 171,050.
What does it mean, this number?
This number mean إنه
Means
this number means the every the average cost per call make by the salesperson will pay 171,050 each call as the average.
Thanks. Now listen, before we are going to go to the second part, the break-even, I think we should mention or focus on some things which Amira skipped or ignored. Listen here. Generally, this table is providing as an illustrative example. It began with calculating the direct expenses. We mentioned before a while that direct expenses, including anything related to salesperson, salary, compensation, bonuses, automobile, lodging, meals, entertainment, communication, samples, promotional, miscellaneous, all these are classified to be total direct expenses. So the total direct expenses is this amount of number or this amount of money. Later on, we began talking about step number 2 with step number 1. How we are going to calculate the calls per year? Generally, we are going to talk about 260 days. These are the total working days every single year. Some of these days will be classified as a vacation, other holidays, other sickness, meetings, training, and etc. So the total of the days which we are not going to work on, they are about 55 days. So we have to minus this number or this number of days from the 260. So the net working days is 205. The 205, imagine this is the average number of the phone call every single working day. Then we are going to multiply 3 multiplied by 205. So the calls 615. Now listen. The 615, we are going to make a kind of a division. We are going to divide the money of the total direct expenses divided by the number of the calls. And then the number which we are talking about is about $172. The average. What does it mean? This is the magic number now. This is the average of cost per call. What does it mean? What does it mean? This means if the salesperson is going to deal with customers, with these customers, as we said, they might be individuals, they might be companies, organization, etc. It means the company is going to ask its own self, this amount of number must be exceeded by a profitable sales transaction. Profitable sales transaction. If the sales transaction is going to be more than its own profit, is more than this amount of money, then the company is winning. Exactly. But if the sales transaction, its profit is less than this amount of money, then the company is losing. Exactly. This is important. Clear? Now let's go to the second step. With second step, calculating sales volume. Who's going to cover this? Go on. Any question, any comments about this? It's very easy. By the way, I'm going to ask about it in the exam. It's important. Okay? Go on.
My name is Khayda Abu Ramadan. I am studying accounting, the 4th level. Now we'll continue the second step, and it's the calculating sales volume. Break-even sales volume, here we have a definition of it, as the sales volume necessary to cover direct selling expenses. We have, as mentioned, Dr. Wessim said in the previous step, that we have a direct selling expenses related to the salesperson. And in order to be a winning or to make a profit margin, we need to cover the direct expenses. Here it's necessary to calculate break-even sales volume in order to determine the minimum size customer that should be pursued. Yani we need to know how many selling we need to make and how many customers we need to sell to cover the expenses that we have. Calculating the break-even volume requires that we know the number of calls necessary. Now, to know how many sales we need to make, we need to calculate the number of calls we will make in order to pay customers to purchase from our product. We need the number of calls necessary to close a sale, and what direct selling expenses are budgeted to be as a percentage of total sales. Now we have a selling cost. The price, I mean, direct expenses should be including in the selling price, and it will be like a percentage of the selling price we need to estimate. Determining the number of calls needed to close a deal may be based on your own experience. Of course, it's not like a subjective matter. It's not based on a scientific way. No, it's just based on our experience and how people may estimate, yani according to their previous knowledge. Okay, we have like an equation to calculate the break-even sales volume. It's cost per call multiplied by number of calls to close divided by sales calls as a percent of sales.
This equation is very essential. Go on.
Here we have examples. Now, in the Dr. Wessim said how we calculated the cost per call in the previous example. And here we have, like for the chemicals industry, cost per call cost $165.8, and number of calls needed to close a sale is 2.8. And we have the percentage 3.4%. In the next slide, we are showing how the calculation is. Cost per sale call, and yeah, we will just apply.
The numbers.
Yeah.
We plug the numbers according to the equation. ايش يعني we plug the numbers?
We just apply the equation.
حسب equation.
Yes.
And the final result that will be
$13,654.
So this is the break-even volume.
Yeah.
What does it mean?
This will be اللي هو the gain, the profit we need to make in order to cover the direct expenses.
Oh, exactly, the expenses.
The expenses.
So if we got this number, this means we are
winning.
What's the meaning if we are even?
No, yeah, there is no profit margin.
Nor losing. But if we didn't maintain this number, this means we are
losing.
Because our expenses in this case will be greater than
يعني our price need to be more higher than this.
If it is more, we are winning. If it is less, we are losing. That's it. Yes. Any question or comments about this? Thank you very much. Thank you.
Now listen. What we are going to do next time? We are going to answer this important question. I can't afford to lose this business. Or this sentence, often it is uttered by the people who are working as a salespersons. So who would like to talk about it? If you would like. What's your name? Siham. So Siham, you are going to begin with this and this. Okay? This and this. Second, we are going to talk about factors must be considered before dropping a customer. What's your name? Nadia? Dalia. Okay, Dalia. Dalia, setting account priorities. Also, this is for you. This is for you. Mention them. Dalia, انتبه معي. Just mention them. Later on, we are going to explain them in a very detailed way. The explanation now here. Who would like to take the first method? Go on, single factor model. والسنجل فاكتور موديل طبعا هتكملي كله مع السلايد تبعته. بورتفوليو موديل. بصوا النيم مي. بورتفوليو طلع مي في 2 سلايدز هير. واخر ديسيجن موديل. بصوا النيم ايمان مع السلايد تبعته لعند هال بدنا ناخذ. يعني المره الجايه بدنا ناخذ ايش؟ المودلز. والمودلز هذول ليش بنسميهم؟ There are 4 methods for setting accounts priorities. انتبه معي. Models for setting account priorities. يعني in other words, how we are going to prioritize our own customers. According to which criteria? In a third words, if you are going to say Saham is a VIP customer or Saham is an ordinary customer, our decision of classifying her, it is founded on rules, it is founded on models. We would like to talk about these models. Are models which we are using to classify our own prospects or customers. Clear? Thank you very much.